It's so interesting that like today we're having this like wonkish conversation about MakerDAO setting rates like they're the fucking Bank of Japan. And you know, like it just kind of shows how far we've come as an industry.
Not a dividend.
It's a tale of two quants.
Now your losses are on someone else's balance sheet.
Generally speaking, airdrops are kind of pointless anyways.
Unnamed trading firms who are very involved.
I like that ETH is the ultimate pump.
DeFi protocols are the antidote to this problem.
Everybody, welcome to the Chopping Block. Every couple of weeks, the four of us get together and give the industry insider's perspective on the crypto topics of the day. So quick intros. First, we got Tom, the DeFi maven and master of memes.
Hello, everyone.
Next, we got Robert, the crypto connoisseur and czar of Superstate.
Good morning.
Then we've got Tarun, the Giga Brain and Grand Poobah at Gauntlet.
Aloha.
And finally, I'm Haseeb, the head hype man at Dragonfly. So we're early stage investors in crypto, but I want to caveat that nothing we say here is investment advice, legal advice, or even life advice. Please see choppingblock.xyz for more disclosures. So Robert, you were telling us that you heard a great joke that you wanted to share with the pod.
Yes.
The floor is yours.
This is for the listeners out there. And I heard this today for the first time. What do you call four professionals who work in crypto?
What do you call them, Robert?
A podcast.
Yes, we are
I
cliche.
said that was a 3 out of 10, but I'm not sure. Maybe it's actually worse than that. Now I've heard it the second time.
You're biased.
I do think it ages better as now that we're all four of us are here in this call together. I'm like,
You're saying it's a fine wine. It's now a 4 out of 10.
Exactly. I think it's gotten better the second time that I've heard it. I know it is. Okay, we're full on bull market now. To the extent that we weren't before. Bitcoin finally crested all-time highs. As of press time, we're above 70K. Ethereum is hovering around 4,000. It broke through 4,000. It's been kind of moving up and down. But a lot of stuff is ripping up and down the market. Gaming is doing really well. Obviously, the AI tokens, as always, WorldCoin, AVAX, Near, a bunch of stuff is just going nuts. And the interesting thing, so I asked what people wanted us to talk about. A bunch of people were pinging me. They want us to talk about Near. I think they might know we're big Near investors. The funny / embarrassing thing is that Near is ripping because Ilya is speaking at a conference on the same panel as Jensen Huang.
I mean, that's a good reason.
I mean, did you?
That's
not
a good
see
reason for a
partnership
coin. The Jensen meme coin was hilarious. The Jensen meme coin also like crashed 85% in an hour, like yesterday.
Right?
It was like I really fell down the rabbit hole of some of these Solana shit coins. I mean, meme coins, whatever. It depends on your prerogative of what you call them. But people have made all sorts of crazy apps to just like watch meme coins being made, and like people have these little betting markets on like, will this meme coin be able to have greater than 50K market cap for more than 30 minutes? I mean,
they're just betting on the meme coins is not enough volatility. Now you need like meta volatility.
It's just amazing. I honestly am like astonished at the sheer level of degeneracy. But the interesting thing is almost all of it like seems to be on Solana. I did see a couple ETH meme coins, but honestly, other than Zin, it has not really. There haven't been so many that have been growing as fast.
It's
growing
too
and crashing.
expensive. If the velocity of meme coin deployment stays like this, like it's just gonna be unsustainable from a fees perspective. So I think Solana has found PMF in meme coin shitcoinery.
I think the like liquidity fragmentation piece on L2s definitely kind of hurts also, because like this is the first time in my life. Usually it's like people asking me like what crypto they should buy, and I'm always saying like don't buy what you haven't done research on. I know the old school Bitcoiner DYOR thing, but like this is the first time in my life I'm getting all these people who I haven't talked to in years suddenly being like, "Hey, have you bought poopy Jensen Huang coin 59?" And I'm like, "What the fuck are you doing right now? This is unreal." Like I people from like high school that I actually do think this meme coin thing is like way more wide ranging. It feels like NFTs in like 2021, and like we're like people who are just not into crypto at all somehow, and like the only thing they know in crypto is Phantom. They don't even know what MetaMask is. So it's like it's kind of an interesting thing because of that. Yeah,
it is definitely the analog of NFTs, where it is this mass market thing. You can play with a small amount of money. You don't really need to know very much about crypto in order to actually play this game. It's very short term. It's very fast feedback cycles. It doesn't feel to me, again, I mean, we've talked about this before, but I think I see more and more people lamenting that this is kind of the financial nihilism of this cycle. There's a way in which that was true for NFTs, but NFTs had more of a cover story, which is, oh no, this is like about social status and about, the metaverse and, there's like the artists, we're supporting the artists, and it had more of a defensible.
There's more of a cultural cachet than, whereas like the meme coins don't even try to have any, they literally are going
it's like the Scooby-Doo meme where like you take the mask off the villain and it turns out, it was all just, rank speculation the whole time. And
but this idea that there's speculation on how long the market cap will stay up is one of the crazier. That is like the true degeneracy. I don't think I've seen.
That's the most degenerate because it shows how short term in nature the life cycle of these assets is. Like these are not like, memes with an expectation that they'll be around years from now. They're memes where people question whether they're going to be around hours from now.
It all feels very euthanasia coaster-esque, the meme that floats around of this cycle is getting slowly smaller and smaller, and I feel like that way with meme coins, where it's like, at this point there's like 100 people trading a single meme coin.
I want to show you one of these sites that is focused on these. How long will this market cap last? This is a king of the
what
hill
are we
game.
Seeing? What are these?
So this is called pump.fun. These are new meme coins launched and the market cap they start with. And the king of the hill is the one that has the largest market cap in the last like 2 hours.
Oh, wow. Okay.
This is amazing.
Honestly, I spent 20 minutes and many lost neurons watching this yesterday, but I felt like I learned a lot.
Oh, geez. Yeah.
Okay. What's the URL so that
pump.fun?
Okay, I'm going to have to do some academic research later.
Okay, great.
Okay,
so let me hold on.
People I went to high school with sent me pump.fun links, and they're like, haha, isn't this fun? I turned $500 into 5,000 because I liked a bunch of Pepes. I'm like, you know what I mean? Like, it's just like one of these things.
Okay, look, here's one thing that I want to clarify, because I think a lot of people listen to the show and they're not necessarily monitoring markets all the time. So one thing I think also that we should make clear in substance to each other, the meme coin stuff is fascinating. It's also a very small part of what people are doing on chain, because almost all of this is on Solana. And Solana right now, I mean, obviously Solana has a lot of activity. It's like, maybe chain number 2 or 3 by total activity, which means that if you look at the top 10 chains, most of the stuff happening on there is not this kind of crazy meme coin mania thing that is happening on Solana. And part of it is, of course, the unique nature of Solana makes it well suited for this kind of thing of like somebody coming, some guy you went to high school with playing with $10 and trading random dog coins. But it is also something that it certainly seems that Solana has this cultural kind of position in the market that it really worked for these low value NFTs in the last cycle. And now that's transitioned into these low value meme coins. Of course, in absolute terms, the big meme coins, Dogecoin, Shiba, Floki, all this stuff. Obviously, there is Bonk on Solana, but there's, the big meme coins are not on Solana either. So the thing that's interesting about Solana is how many
meme coin of them all.
What
Bitcoin?
Is the biggest meme coin?
Bitcoin.
Oh, you're okay. All right.
I mean,
the best
Bitcoin is.
Too.
Yeah, no. I mean, Bitcoin is the OG asset that's based on social consensus to create its value. And so, obviously there's two camps,
Oh, are you seriously arguing that Bitcoin is the same financial nihilism as all these meme coins?
No, I did not say financial nihilism, but it is definitely a distant cousin of financial nihilism in that most of its original value proposition of those who very early on became believers in Bitcoin came from the same initial tendencies that lead to financial nihilism, which is a distrust of existing financial instruments and assets. It is a distrust of government. It was very loudly a distrust of fiat currency itself. It's all of the things that make you want to give up on the existing system were the sort of ingredients that catalyzed Bitcoin. And it's those same ingredients that I think are leading to financial nihilism in faster, cheaper, more fun, more memey, more jokey assets, like these made up 30 seconds ago assets on Solana. And there wasn't this, ability to create so many assets in the advent of Bitcoin. There was one asset. It was the OG. It was the original. It was the only asset, the only blockchain really standing alone for a quite remarkably long time. Even when there were new blockchains, there were forks of Bitcoin. I think if Bitcoin were founded, today, it would be very different. And I do think it's related. The same energy that feeds Bitcoin is related to the financial nihilism that exists of these made up just now Solana tokens.
Okay, so let me take the other side of that, because this is interesting, and you've got my mental juices flowing. So in some sense, okay, let's say that you're, I don't know, Tarun's high school friend, and you're coming on board to trade meme coins, right? And obviously the meme coins are stupid, and they have, frogs and dogs and whatever random bullshit on them, and they're misspellings of politicians. But it's not that different in kind, right? In terms of what you're actually doing day to day, it's not that different from what you were doing when you were flipping NFTs. And it's not that different from what you were doing when you were trading random ICOs. The difference is that the NFTs and the ICOs had a story. There was some story that was remotely plausible about why these things had intrinsic value. Okay. And with the meme coins, there's no longer any story of why these things have intrinsic value. But here's the counterpoint I would make to that, is that like the game that fundamentally these people were playing was similarly cynical through every cycle, right? When you're flipping ICOs, when you're flipping meme coins, when you're flipping NFTs, it's all the same feeling that you have, which is you don't believe any of this stuff. You might think someone else believes it. And that's why you're flipping this, random fucking, IoT ICO that you did in 2017. But you're assuming that somebody else is that greater fool that's actually buying this, genuinely thinking it's real, right? And in some sense, perhaps that was never true at all. Perhaps there was nobody who actually thought that the IoT ICO in 2017.
I really love that you hate IOTA so much.
I'm not talking about IOTA. To be clear, they were a successful ICO. I'm talking about sort of the bottom of the barrel.
I think we got to get Eric Wall on here if you're going to call IOTA a successful ICO.
All right. So see, what I'm hearing is,
yes,
this is a two-dimensional axis, and then on one dimension, there's financial nihilism ranging to trust in the existing system. And the other axis, there's, we'll call it seriousness versus, jadedness. And Bitcoin is in the financial nihilism plus seriousness camp. And these made up 30 seconds ago.
I don't know that Bitcoin is financial nihilism. I think Bitcoin there's a nihilism about high finance, maybe. But I don't think that's the same as financial nihilism, right? Financial nihilism is that real value is bullshit.
Nihilism about finance is not equal to financial nihilism, is what you're saying.
Exactly. Yes. I think you can be skeptical about the edifice of finance, but not be skeptical that there's such a thing as real value, or there's such a thing as cash flow. There's such a thing. Like, if anything, the Bitcoiners they're Austrian economic. Like, they're very loud about the fact that no. The financial edifice you've built is insecure. Whereas a financial nihilist would say, who cares what's secure or insecure? Nothing matters. It's all just memes.
I will say, I'll give you one other example about meme coins versus NFTs. That's actually a data point in which they're like objectively different, which is NFTs were all about like capping the collection size at like this like fixed, almost socially agreed upon 10,000 number. I don't even know why 10,000 other than CryptoPunks chose it, but whereas all of these meme coins are like supplies that have 1 billion doing all these kind of like small size bias type of games, where it's like, oh, we really don't care about the value of this thing. Haha, I can give you 1 billion of it. You know what I mean? Whereas like Bitcoin and NFTs are actually very much about like, hey, you only get a small, you can't.
Absolutely. And this is what a Bitcoin maximalist would point to immediately in terms of proof of work, in that Bitcoin was forged out of actual effort versus any of these coins, which no effort or cost goes into their manufacture. And it's a product of its time. I mean, props to Solana. The fact that transactions are so cheap that people can make hundreds of new tokens per hour.
I mean, you were just watching live, right?
Right.
That was like live new shit coins.
No, that was live. We were watching a live feed of just new coins being created. I mean, AIs are going to create millions of these per hour at some point, hoping to break through.
Wow, hot take.
AI's on BitTensor. That's gonna be the new
BitTensor Solana collab.
Yeah, like the reality is like this is like 10,000 new penny stocks being created every day. It's like normally though, like to create a financial asset, there's like people and they have to organize and they have to like do something or like come up with a story. And these brand new meme coins on Solana have none of that. There's no work required, and so there's almost an infinite supply of these tokens.
Yeah, completely true. I guess the question in my mind, so I mean, when people look at this, they're like, okay, so this is just laying bare what we thought all along, which is that crypto is just a giant casino and there's nothing here but just people speculating and kind of, this like P2P, just idiots throwing, shit at each other and hoping somebody comes out on top.
Well, I was going to say, like, it's not strictly P2P or zero sum. And the reason why I say that is even amongst this like jungle of thousands of new Solana meme coins, right? Some of them sustain or survive long enough to have a market cap that continues to grow. Dog with hat is an example in that the aggregate wealth that's been created and the aggregate market cap of these Solana meme coins is non-zero. Like there have been ones that break out and you can say like in essence, like the total.
I don't know that I can agree that there's a positive sumness to meme coin. Even if they grow big, like, yeah, they can be sustained. But is that positive sum?
Yes.
Like they had to sell something else to like put money.
There's no value being created.
Yeah, what's like ultimately?
No. In fact,
we create value in society through productivity.
You could argue it's arguably negative because all it is a tax the validators get to take.
That's true.
Yes,
the validators
are wasting their time making
the validators are the one. I mean, we should talk about the Jito thing maybe also, right?
That's
yes,
great segment.
Okay, cool. All right, so it's interesting because we're talking about Solana being this meme coin engine, and so there's this protocol called Jito. I believe Robot Ventures is an investor.
We are
in
investors.
We are. Disclosure.
We talked about their mega airdrop, which was the thing that kicked off the Solana bull run.
And we had
the Jito. There's sort of
founder on here on the podcast.
Yes, we did. So it's sort of like the flash bots of Ethereum. They kind of run this, sidecar that people can run on their validators in order to extract MEV essentially from Solana blocks. And so it turned out that a lot of people who were trading meme coins were getting ruthlessly sandwiched in Jito blocks. And the sandwich attacks were getting very, very intense because, of course, when people are trading meme coins, they're retail, they don't really know what they're doing. They're not setting very strict slippage limits. And so there was a lot of money being made by people capturing MEV by essentially front running, back running, or essentially sandwich attacking people who are trading meme coins. So sandwich attack means you front run and then you back run to like sell out, so you're not taking any risk. And so the Jito team announced that they were going to be shutting off their mempool service, their public mempool service, which is, Solana doesn't normally have a mempool. Jito sort of exposes a quasi mempool such that people can see what's happening that's a pending transaction and go, package up a bundle around it and front run it or back run it or sandwich it. And they announced that they were shutting this off so that the experience on Solana was going to be improved for users and they weren't going to be front run as aggressively. This was largely lauded in the Solana ecosystem. But it seems to have been a response to the fact that so much of Solana at this point is a story around people trading meme coins. And the MEV extraction was getting to be such a big issue for people trading on Solana. Now, you guys are investors in Jito. This seemed really bizarre to me that, it's kind of the opposite of what Flashbots has done. Flashbots has kind of said, hey, we're accelerationists. This is the end game. Obviously, MEV is going to be extracted at scale, at equilibrium. So let's find the best way to do it. Solana, as far as I can tell, Solana Foundation more or less knocked on their door. Was like, hey, yo, this is bad for the network. Please turn this off. And they were like, okay. And then they turned it off. What is your guys' take of the story here?
I think, I don't think that's 100%. Like, I can see where that interpretation comes from, but I think the correct way to think about it is Jito still runs their auctions for slots. So it's, if you look at their bundler, it's the bundler is still running, right? That was their main product initially. The mempool was actually the second product. I think one of the issues is more that in Solana, it's just hard to do this mempool-like thing while meeting the latency constraints without revealing a ton of public information that makes it even easier to sandwich more people. Whereas in Ethereum, you can actually do a lot of stuff to kind of like delay encrypt things in certain ways that might take a lot of time, but then people have a harder time front running you. And this kind of transparency that has happened at low latency, makes it just easier for sandwich bots. So to give you some context, like Jito on the last day it was running this had 10K Solana in tips. So that's sort of fees paid to validators to include your front run and background transactions in, which at current prices is like over $1 million a day, right? Like in just fees to validators, which is like, that is really quite high. That's like 500 million. It was like 500-ish million annualized per year. So like that's a lot of fees going to validators. And you could see the steady increase right when the meme coins really took off. But to be fair, we actually saw a similar thing in Ethereum when Jared from Subway.eth and Pepe were very popular, right? And you saw like this huge increase. So I think it's just a natural thing that these types of assets just generally attract unsophisticated noise trading type of behavior, and so like it's just easier. And so I think like I don't think that they're kind of like, oh, we're never going to do it again. I think it's just they have to get an implementation that makes sense.
Well, but so Tarun, I mean, you've always been the accelerationist among us, and you've also been the person who's like, MEV cannot be removed. It's always there.
Yes.
Right. And so it sort of looks like they are trying to remove some MEV from Solana by removing this feature that obviously somebody else could go in and create a another version of or something.
I think they're trying to buy themselves time for coming up with a better solution. So I would argue that like Ethereum sort of has done similar things in the past, right? Like when they had the centralized flashbots auction, effectively bought them time until the merge. And I think effectively MEV, because it's like this dynamic game, especially in a permissionless environment where someone can introduce a new smart contract, it gets a lot of liquidity, and all of a sudden all the MEV migrates from one type of strategy to another. You kind of have to, when you're designing the system, you have to be a little more flexible because like you might make some design trade-offs that in production don't actually do.
But Flashbots had a different problem than this problem, right? This problem seems Flashbots was trying to enforce that people, basically stayed within the auction, didn't go out of the auction. Whereas here it seems like the problem is the whole MEV extraction that's happening, period.
Well, I think it's also a little more like the order flow auctions in MEV Share or MEV Protect, right? Where you can send your order flow to these protected mempools, sometimes encrypted. And so people can't see all of your order flow. They get some information about the aggregate order flow before deciding to make their transactions. And I think when you have lower latency constraints, like you have to wait longer for blocks, you can actually run those more efficiently and make them more private.
Right.
I think there's just a lot of design constraints engineering wise that you have to be very cognizant of. And I generally think like if your philosophy is like we have to have low fees and good user experience, perhaps at the detriment of validators, like they have to run a lot more. I think over time I've come to the following kind of pithy oversimplification, but I think it's sort of a thing where I think can give a listener who might not be super familiar with this stuff the easiest, like ELI 5, which is Ethereum, the protocol has users. The protocol views its users as validators, right? Like it views the validators as the users of the protocol. Like everyone should run one or everyone should participate. Whereas Solana views the user submitting transactions as the real users. And I think Ethereum, has this kind of tension between like who's our real user, the validator or the end user. And Solana is philosophically like the validator is just a service provider. We don't really kind of care that much about them, to be honest. And I think when you have that kind of philosophical objective, you get these different design decisions. But at a very high level, I think, when you really care about maximal decentralization, maximum security, then it does make sense that your network is built around the validators or the customer in some ways of the protocol. And so I think this different philosophy also is kind of a thing that bleeds into this discussion. But I do think, I think like there will inevitably be solutions figured out. I think actually, in fact, I think with a little more engineering work and design, I actually do believe that you could get to reinstating it, but in a way that like doesn't leak as much information though. So like
Right.
and I think that's kind of the thing to look forward to, is like they're getting to that stage.
But okay, so if you get to a place where this auction is not leaking as much information, is that going to change the experience of the Geo Bowden meme coin trader who's still sledding huge slippage limits? Like, are they still going to get ruthlessly sandwiched?
It just means that the sandwich attacker is taking on risk, right? They're doing a stat arb strategy versus a pure, like, hey, we're guaranteed profit.
Right. But like right now, I mean, in Memecoin Mania, like it seems like it would more or less end in the same place.
That's a good question. That's a good question conjecturally, because like even on Ethereum, we saw when Pepe was crazy, like we kind of saw the same type of thing. It just wasn't as severe, and I think it's also just because Ethereum just didn't have as much demand. Like the users were trading much larger size versus in Solana, it's like very small size, but like huge amount of addresses, 100K addresses. Yeah.
Right.
So I think the design trade-offs are also kind of different. It's almost like this like latency bandwidth type trade-off thing that is where bleeds into this.
And the vast majority of Ethereum transactions still go through some sort of like public mempool type of thing. I don't know what sort of the ownership or the market share percentage looks like for like not quite a mempool, but sort of like this Jito pre-block kind of auction. But like there's a future where basically everything goes to Jito, even though Solana doesn't have a mempool, and like that would obviously allow them to sort of enforce the characteristics of a block-based auction that they want to enforce.
Right. The fundamental problem comes from the fact that people are broadcasting their orders or intents before they get settled in blocks, and it gives an opportunity for anyone to come along and profit. And the only true solution is either reducing the amount of information that's being disseminated or change the structure of how blocks are created. And if you put everyone through a pre-build that has a different information flow, then it could solve the problem. But as long as the majority of orders are still being broadcast broadly, there's always going to be MEV. And there's more MEV when the transaction costs are lower. You can, if transaction costs are 1 cent, you can rip off a user for 12 cents.
Yeah. So, well, speaking of the fees, Ethereum is going through its own fee upgrade at the moment through what's called Dencun. So Dencun is supposed to be scheduled for Wednesday. So I think by the time this podcast is out, it should be post Dencun. But it's going to be one of the biggest upgrades for Ethereum in a while. There are 2 upgrades that are happening simultaneously, a bunch of code changes. But the main thing that's going to be happening is what's often called Proto-Danksharding, which is going to include the introduction of blob storage. So this is the big thing that's supposed to make rollups cheaper. Not everybody. Weirdly, people seem to be kind of sleeping on it now. It doesn't seem like a lot of people are talking about it. But I remember like 6 months ago, it was all anybody could talk about was how excited they were that rollup costs were going to get cheaper. But there's now people who are increasingly concerned that, especially now with, as you mentioned, Memecoin Mania and the amount of gas that's being spent on things that are not layer 2s. I think actually 6 months ago, more of the gas that was spent on Ethereum was layer 2s and DA. And now increasingly it's more just people trading random stuff on Uniswap. And so there's increasing consensus that this may not have that big of an impact on fees. It may lower the fees for layer 2s, but it's not very likely to have much of an impact on the fees for everyone else on Ethereum. Any thoughts or predictions about how this is going to affect the layer 2 game? And of course, by the time that this is launching, there's external DA, there's Celestia, there's Avail, there's Near, there's EigenDA. And so there's a lot of different DA solutions now competing for people to post their rollup data there.
I delegate my prediction to Tarun.
I think the prediction markets are quite optimistic. I believe they're like pricing things pretty low. I think still quite a bit higher than Celestia, but quite a bit lower than mainnet right now. Probably, if I were to guess, and I'm not 100% sure, I think there's like a factor of 5 to 10 difference between the sort of like Celestia and prediction market prices.
That's not bad. If that comes to pass, that'd be pretty good.
Yeah,
Celestia is like a factor of 100 or more less expensive.
Yeah, that's why I'm not sure if the prediction market is like overly optimistic or not, but because like I do think there is kind of this, if you build it, they will come type of aspect to 4844, where there's like a ton of people who are like, oh, I'm maybe building a L3, which is something that posts to an L2, or I'm building something else, and like, oh, if it actually is really cheap, then I start going to mainnet and I move to mainnet, right? Because it's easier UX for the end user in a lot of ways. So I don't know. I think it'll definitely be positive. I think it'll push the DA layers to like really have to optimize. But I don't think it's as big of a deal as people claim. Like, I think there was like a really good analysis a while back from Alex from ZK Sync about how like the net bandwidth increase is not really that much in the current state versus like the full Danksharding version. So, and I think the cool thing about the alt DA layers, because they all actually are taking different approaches. Like if I compare Eigen, Avail, and Celestia, is that like they all are making different like latency versus bandwidth trade-offs in terms of like how much communication has to happen versus how hard it is to reconstruct blocks versus like whether I use a commitment scheme or not. And I think all of those things are going to be the experiments that show you which one users prefer and which ones, like the users here meaning developers of rollups. And hopefully from those experiments, Ethereum can kind of take the best combination and add it to mainnet, but it'll take a while. So I think like it's sort of not as impressive of a thing right now than it was before all these alt DA layers came out, because I actually think like when you look at, say, like an application that has a lot of users, that's its own rollup, say like Avo, which disclosure, I guess we're all investors in. Avo is like something where like they had real users, and the difference between the 5x and or 10x more in fees is huge because they're a perps DEX and like volume is everything for them, right? And I think it's going to be a question of like, do we have these apps that are like Solana, shitcoin, meme coin trading type of stuff, like where you need to be able to handle tons of volume like Ava, or are they going to be slower things? And I think 4844 is sort of in this middle ground of like, it's good for these slower things. It's not necessarily going to be the best for, say, like something like an Avo. And say if Ethereum wants, I'm not saying like Ethereum as a community has a collective desire to want this or not, but let's say they want meme coins back, they want to relive the Jared from Subway.eth days, then I kind of think 4844 is not going to be sufficient. There's certainly a ton of like people on Twitter trying to be like, like all the Solana stuff will come back once we have 4844, and that part I'm much more dubious about.
Yeah, I do agree with you. It feels, especially in this environment, now that so much infrastructure has been built off Ethereum and the integrations have been built, and there's just a lot more willingness for people to realize, like, look, if I put my DA somewhere that's not on Ethereum, not only do my users not care, they will reward me for it. They will actually be like, yeah, awesome. Thank you for making my application cheaper.
The users of these applications expect Solana UX, right? They don't expect. They've never made a crypto transaction before in their life until they downloaded Phantom and bought Poopy Biden 27. And I'm trying to make up names, but
there's probably a new token with that name.
Yeah, but that's the thing that's crazy, right? Like it's like those people I think could not care. They could not care.
To be clear,
all.
I don't think those people are the ones who are coming to trade on Avo or using Ethereum.
No, I don't. I'm giving Avo as an example of like a standalone application, has a lot of users, has kind of like a good ecosystem where they still value Ethereum liquidity, right? But they care about their UX enough to go to alt DA, and like that's a trade-off that I think a lot of rollups will make. I think certainly not the like Arbitrum One or OP mainnet type of rollups, but certainly these. I think the other rollups will inevitably kind of have to make that decision. And I do think the Solana UX attracting a lot of new users is going to be very compelling for rollup developers, right? They're going to be like, how do we replicate that? And I think that's the story for the alt DA layers, because 4844 isn't quite enough, So I don't know if that's a prediction, but that's
let me ask you guys this. I'd love to just get very, very quick predictions. So obviously Proto-Danksharding, also known as EIP 4844, it took a while to get here. I mean, people have been talking about this for years, and now finally by Wednesday, hopefully it should arrive in mainnet without a hitch. It's not that much bandwidth, as you were saying, Tarun, how many megabytes per second can you actually send through this thing? Once we do have full Danksharding, which is, we have many, many different streams, highly, you can just imagine many, many different blob streams or many different 4844s working in parallel. Then there'll be a lot more bandwidth on Ethereum. What's your over-under on how long that takes to arrive? Tom?
I'm going to go 3 years.
3 years. Okay, so 2027.
Yeah.
You get. Okay. Robert, what do you think?
4 years.
2028. Tarun, what do you say?
3.5 years.
Oh, that was a sandwich attack the opposite direction.
Yeah. All right. I'm going to take 3.5 in a day is going to be my bet.
Oh, MEV.
Yeah, I think that's right. I think that external DA is going to be for a fucking while. I think, and even blob storage is so much simpler than Proto-Danksharding is so much simpler than full-on Danksharding.
By a long shot. The
technical
I don't know. Maybe
implementation
complexity is very high.
Yeah. 4 years might be actually.
But the reason I think it won't be that much longer than that is all of the alt DAs are basically doing all the R&D and engineering work for testing all of the different.
They're doing the R&D, yes. I don't know about the engineering, whether Ethereum will actually import any of their engineering work.
I totally think I think it's actually quite a bit of technical duress, both on the cryptography side of getting the commitment scheme is working correctly and handling all the edge cases for inputs. There's going to be a ton of code that I think will get borrowed. I'm sure maybe it'll get rewritten, whatever, different language. But I guarantee you, a lot of the lessons learned from the alt DAs will be the thing that goes in. It won't be they're.
But it has to get implemented in all these different clients, and it has
for sure. And that's the hard part. But I think the R&D part historically for a lot of Ethereum upgrades is the part that took a while. If you think about how long it took to do 1559, I think the implementation was actually not as crazy as the R&D and research time that was spent on it. So I kind of think if we're outsourcing that, then maybe it's a lot easier.
I think there's also just consensus on the roadmap. I think we forget how often Ethereum's roadmap has changed over the past 5 years in terms of what they see in terms of the future of scalability and how these things are going to work. And so it feels like at the very least there's a clearer vision and consensus around Danksharding being sort of a future for Ethereum than a lot of the other proposed upgrades in the past.
I don't know. I would put a 20% chance that Ethereum just literally gives up on Danksharding. And they're like, look, alt DA has won. It's big enough that, I don't know, why bother? Let's just do other stuff.
I am not sure about that. I'm it's one of those things where I feel like you really do lose your we are the provenance and settlement of everything if you give it up completely.
I mean, they gave up execution on shards, right? I don't think it's that much more to give up to just be well, it's 2027. The future is, a kajillion rollups and all these L1s and Solana is the Memecoin factory. And, if all these DA layers that are already sharded and are already doing all this fancy stuff,
I think
do they really need us to do this?
Interesting thing about rollups is you made sharding pseudo permissionless, right? You don't care what gets executed, which
right, yeah,
arguably is more towards the philosophical ideals of
and once you have DA layers that are restaked and they're kind of isn't that more or less what we meant when we said we were going to do Proto-Danksharding? I think there's a non-trivial chance that they just say never mind.
Okay, what you say 20%? Does anyone else have a prediction on that chance?
I think it's way lower that they give up. I mean, frankly, I think they see it through. It's just a matter of time.
Tom, what would you say?
I mean, at that point, what does Ethereum really have? I think Bitcoin gave up a lot of upgrades a long time ago because, it had its sort of own story to sort of rely on. But at that point, what is this thing supposed to be? You can't tell the story around it being, immutable and sort of digital gold, like Bitcoin. It's this weird sort of like hybrid execution DA layer, but it's not really the best at either of them. Like, I just think that feels like a weird in between spot to be in the market.
I don't know. I don't think Danksharding is that integral to Ethereum's story. I think it is. It was integral to like the idea that we're going to scale through rollups, but now the rollups are scaling and they're working. And if eigenlayer and restake security and whatever, it's kind of like, well, it's kind of like community run Danksharding in the same way that rollups are community run sharding.
Yeah, I guess it just depends on how competitive it would be in that market. Like, who knows? Maybe this is going to be sufficiently good, but it feels like the rest of the market should continue to evolve beyond from what we have today.
I do actually think that like having too much fragmentation across alt DA layers is a little bit like liquidity fragmentation across many rollups, and like there is going to be some reason to cohere.
Is it? I don't think it's that similar to liquidity fragmentation across rollups.
I don't know.
I mean, it's not user, like it doesn't impact your UX as a user.
Yeah, I guess that's true. I feel like, but it's like you care about these like worst case guarantees when you think about DA, right? Like, oh, like if this fraud proof is valid,
right? Which is why Ethereum says, look, if you need that worst case security, here is a blob stream. We'll slowly increase the bandwidth every year. Like by 12% or something. Like I feel like that. I mean, again, I think more likely than not they actually do it. But I do think there's a very non-trivial chance that they eventually decide.
For the record, I'm a little bit in your camp a little more. I could see that it's totally conceivable that happens.
I agree. Talking it out like this,
I feel like you're actually convincing me a little bit. I was so much more like philosophically, no one would agree to it, but laziness always beats philosophy. That's what I've learned in life.
Yeah, especially when you're winning, right? If Ethereum's like, look, we're still number 2, like we're still worth $1 kajillion, it's impossible to pay fees, but someone's doing it. So,
and you're not changing your level of decentralization. You're just making recovery from an attack slower in some ways.
Right. Yeah, exactly. It's like, look, if you absolutely must, post it onto the blob stream or even, post call data. We're not stopping.
I don't think they're going to stop trying for a while. I don't think the Ethereum Foundation.
Agreed. They'll definitely, I think there is. I think this is like a 2027 thing. Yeah,
I think your claim is like, if we get to 4 years and it's not launched, like, will it continue?
Yeah, I think by 2027 they're like, we're not even close to like starting implementation, and like,
do you think
we're still arguing.
And Plasma will both be in the same sort of regard?
I more like execution environments, like it's just sort of like it sounded so good on paper, but then like, look, there's so much risk, and like, what if mainnet goes down, and like, all the teams are fighting, and the like DA seems to be fun. Like, is it really that central to our story that we're like the magical DA layer as well as the world's computer? I don't know. Anyway, all right. This is besides the point. There are a couple other things I wanted to get to today. We've been talking a lot about the bull market. One of the interesting stories this week has been from the land of MakerDAO. So MakerDAO, largest decentralized stablecoin, they have historically they had $5 billion that was in total reserves in MakerDAO. And MakerDAO started freaking out because very recently, amidst all the bullish sentiment in the market, the DAI reserves ended up dropping precipitously from 5 billion to 4.4 billion a week. Now, why did that happen? The answer is that DAI savings rate right now is only 5%. And people are like, yo, I can go make a lot of money taking this capital out of MakerDAO and going and farming and doing this and that and blah, blah, blah. And so MakerDAO announced that they were going to do an emergency fee hike to raise the DAI savings rate from 5% to 15%. Basically meaning that now it's going to be significantly more attractive to hold DAI. You're going to get paid more. And the interest rates, the stability fees, which are the interest rates you have to pay to borrow, were increased also very significantly to basically make it like, look, the cost of capital in crypto has gone up. There's a capital shortage because everyone is farming and doing all this, meme coin trading and whatever. And so all of this happened very suddenly, very, very, very quickly overnight. This caused the value of MKR to go up. Actually, I think it went up like 15% or something overnight on realizing that MakerDAO is now going to make a lot more money. But a bunch of people are also upset at seeing how quickly all of a sudden, the rate governance has moved without much notice to to DAI holders or to MKR holders. It all seems like very reactive, which I think is freaking people out. This is also very close to the 4-year anniversary of what you might remember was the DPEG that happened in March of 2020.
Today is the 4-year anniversary.
Oh, today is the 4-year anniversary.
Yes.
Oh, damn.
Yes,
Okay.
March 12th is
12th.
the 4-year anniversary of March 12th, 2020.
Yes.
Black
I saw
Thursday.
a lot of people were posting about what they remembered 4 years ago when that was, I mean, the day that every market dropped 50% was also the day that DAI had a huge shortfall. So what's your guys' take? Obviously, you guys are, Tarun and Robert, you guys are different sides of the DeFi wonks. And of course, Tom, you probably have strong opinions about this as well, being the DeFi maven. What are you guys' thoughts on MakerDAO jumping in and crazy runarounds on the interest rate?
Yeah, well, a couple points. I agree with your sentiment that this hike from 5 to 15%, both on borrow costs and stability fees, seems incredibly sudden. I feel like, a good process or good governance would have seen this increase from 5 to 15% in a staggered rollout over a couple actions as opposed to immediately. I mean, to me and to most people on crypto Twitter, this was a shock how rapidly rates were raised. And there was a lot of warning signs that rates would have to raise. I mean, we've seen, and this goes circling back to prior conversations, things like Athena, there's interest rates of like 30, 40, 50, 60% across the crypto ecosystem right now. The basis trades for the cost of capital are showing that markets are valuing capital right now at still far above 15%, right? The fact that like you have these basis trades yielding like 60% shows you that like right now the market itself wants to be levered long because of how rapidly asset prices are rising. And so, one perspective is that 15% is not enough. And we've seen weeks of higher interest rates across the entire crypto, market structure. And so, first off, one, way too sudden. This could have happened sooner and it could have happened more, incrementally, even if they were getting to 15%. And two, I think the, side effects of this aren't that well known. I think it's going to be really interesting to watch how this unfolds over the next couple of days and weeks. But, putting your base rate at 15% is quite remarkable. And, it is funny that it literally is 4 years to the day after Black Thursday, when, for anyone listening to this call who doesn't even know what that is, let me give you a quick synopsis of it. Asset prices fell by 50% everywhere, and a lot of MakerDAO CDPs were auctioned off. And because Ethereum and the mempool was so congested, nobody was able to bid on the CDPs or these vaults that created DAI. And so all of this MakerDAO collateral was auctioned off for $0, and it created pandemonium. And today, MakerDAO actually looks very different than the way it looked Black Thursday 4 years ago. Today, the system is not how most people remembered. It's not a system where all DAI is created through vaults owned by individual users, that it's either collateral or wrapped Bitcoin collateral. And if, the prices go down, it gets auctioned off. Most DAI is backed by what was called the peg stability module. And this was created as a response to Black Thursday 4 years ago. The peg stability module said, hey, if there's a market dislocation and people want to get out of DAI, we can't assume that there's enough bid in the market to soak up that DAI. Why doesn't MakerDAO, the protocol, have a big bucket of USDC so that when you want to sell DAI, you're basically selling it back to MakerDAO, the protocol, for $1 of USDC. And you don't have to have organic market demand to buy DAI the second you want to sell it. And you don't have this synchronicity between supply and demand for DAI, the stable coin itself. And the PSM has done a phenomenal job over the past couple of years creating DAI price stability. Unlike Black Thursday 4 years ago, the price of DAI has been basically $1 since then. Why? Well, no one really wants to pay more than $1 for a DAI, and there's more than enough USDC to sell it for $1. And so the price has basically done a phenomenal job being pegged to USDC. And really what's causing this dislocation is that the PSM is being drained. And so when you visualize what is MakerDAO, the system, it's almost like it's slowly returning to its roots of like, hey, there's not that many stable coins backing this that are owned by the protocol. Instead, it's mostly, volatile collateral. I mean, it's not like a black and white thing, but this problem of having to raise rates comes from the fact that like they can't let it return to market forces on the price of DAI. Like, especially when there's like, a decreasing holder base that want to hold DAI. And so it's a fascinating system to watch it play out. And honestly, like these are slow moving trains. And I think, MakerDAO can watch them in motion and take more predictive actions than what got us here with this 5 to 15 hike over the last couple of days.
Tom, what's your take?
No, I think you said it right. I think people don't appreciate how much the interest rate environment in crypto has changed in the past 2 months. So in the post where they talk about sort of the emergency changes that they're making, they cite sort of Aave tether borrow rates as an example of interest rates. And like, just for reference, beginning of February, 7-day average to borrow tether on Aave was 4%. Even before this Maker post went up on March 8th, the interest rate to borrow tether on Aave was 15%. And so, yes, I think people obviously expect Maker to change rates more slowly as they have in the past. But like the market is being very volatile and Maker just reacting to that because they don't sort of have this, bonding curve type mechanism or AMM type mechanism that most of these on-chain lending markets do.
Tarun, thoughts?
Yeah, I mean, I think this is just kind of like, the rate exactly like the rate environment being kind of compressed. The fact that even just like the general cost of capital in crypto has gone up so much. The opportunity cost of holding certain assets is also quite high. So it's just sort of this natural crunch. I agree with Robert though that like it was a bit sudden given Maker's history. I feel like they're usually very gradual, prudent. This felt a little like rushed, but I also at the same time kind of get the no one wants to be in the position Liquidity was at when they kind of had their redemption event issue, and I sort of think like they're being proactive about that, and that's like a thing where it's like the relative rate impact your stability. I mean, I think it will be interesting when, if the market kind of calms down and like, how do you gradually lower this down? That's to me, the on the way up is kind of easy. It's always easy to tell people that story. I think the on the way down is the part that is to me the like, if they did this the other direction, I would be much more like, whoa, what the fuck happened? But on the way up, it kind of makes sense.
Well, that's why Rune wants to put an AI in charge of governance, right? So, this is a bit of a departure from the sort of kind of financial analysis conversation you guys are having, but it just because I was remembering, Robert, I completely forgot about the broken MKR bots that weren't liquidating in 2020 that caused this whole the whole under collateralization. Obviously, I mean, it was more of a bug. It wasn't that literally nobody could get into the mempool, but rather that their bots couldn't get into the mempool because they were misconfigured because of how expensive the gas prices were at that time. And I don't know, just hearing you recount that story, I just kind of had this like twang of emotion. So
you're gonna cry on air. You're gonna cry on air, Haseeb?
No, I can't. I'm too hardened from all these cycles of crypto.
If there's a day to do it, it's the March 12th anniversary.
Wow.
It's true. Yeah, but like there was really a moment when we thought in March of 2020 that like maybe all of this is over. Like we had a good run. We built all these like little kind of things out of sticks and glue, and we're like, oh, look, maybe it'll stand. And we're just like, nope, fucking the world showed up and knocked over your little, Lego thing. And no one cares that you guys are trying to build this decentralized financial thing. And they went in there and they auctioned off the stuff, and some people bought it, and like they made it back, and now we have like, and now we're like complaining about MakerDAO monetary policy moving too fast. Like it's kind of a trip when you zoom out,
For the record, I'm not saying they made the wrong decision by any means. I do agree it was kind of historically out of line with their
totally. I think it's the right decision. They should have made it.
Yeah. I'm not saying whether it's right or wrong. It's more like
It didn't learn the lessons of history's past. It does always make me a little bit sad about that aspect of crypto, and that like people just like completely forget the lessons learned from the past almost immediately. Yeah. They like see number and or liquidity go up, and they just like are like rah, let's try again. And a lot of it just comes from like not doing much background research, which is a little bit even more sad in some ways.
That's true, but you do also kind of need some of that in the world, of people who are not going to hew too closely to like the mistakes of the people who came before them and say, look, when you're doing it with other people's money, it's a different story. Obviously.
Yeah, I think that's.
I don't endorse that too much. I don't endorse that too much.
That's the point. I'm kind of getting.
Yes. But you remember, BitShares came before MakerDAO.
Yeah.
MakerDAO was like, look, we think BitShares did it wrong, and we think we can do it better. And they didn't let themselves be dissuaded. They were literally inspired by BitShares, even though BitShares.
No. I'm not saying that particular. I'm just saying like there's a lot of times, especially when the market goes up, that people start just like pitching you on ideas or projects or whatever for like things that have clearly blown up or not worked in the past. And they clearly did absolutely no research, and they think they came up with everything themselves for the first time that humanity's ever heard this idea. And I'm always like,
right.
Like it's like the opposite of like, academia in some way, right? Where everyone's like too afraid to even say an idea because they assume someone else already like came up with it. In crypto, people have this like arrogance that's like, oh, I of course I'm the genius who came out, which I don't know. Maybe that comes with the nature of the game, but it's kind of one of these weird meta observations.
Well, no one on this call will forget March 12th, 2020.
No.
It's sad that there's a lot of people who weren't around for it, who are part of this generation of
I remember
users,
I was
founders,
I was
investors.
like half listening to this Maker emergency call and half trying to like buy toilet paper and
I remember those.
Yeah, it was during the pandemic. I know.
It was like the first day, right?
Oh man, it was such an insane time. I will say, anybody who's listening to this who wants to get deeper into DeFi or wants to understand more, I wish I had something to recommend. I wish somebody had I wish there was a book or like a documentary or something. I think in some sense, this is the issue with our industry, is that yes, all this stuff is happening out in the open, but there's such a shortage of people who are kind of documenting it and articling it and making it legible to people. Like, all this stuff happened out in the open. There's probably YouTube clips of those governance calls. But can you really trawl through, 3 hours of like random people on a Zoom freaking out about, what they should do about the auctions? So someday, when the four of us are retired, maybe we'll like work on some fucking crypto history textbook memoir or something. But it
has to be a series of TikToks where you have to reenact each scene.
Obviously.
I don't know about
that.
Otherwise,
no one's going to watch it. No one's going to watch it. By the time we're retired, it's going to be all in your Apple Vision Pro, and you're going to see us
30 seconds or less.
It.
Okay, fine.
We will.
Yeah.
AI models that we write the prompts for that generate the video.
Maybe that's
like Sora videos of this.
Yeah, perfect. We'll license our likenesses, and then some AI will create the film for us. Yeah,
I don't think there's any licensing of likenesses in the future. Hot take. I think we're going to be too far gone.
Property rights are going to collapse, and we're going to be in this this.
I think
anarchy. Is that what you're?
IP for things like movie and music rights might be just like completely destroyed. Like the current legal system can't handle it.
You can tokenize it so the AI can buy it. That's
IP
the secret.
IP Nile. Yes,
How far is it going to go, Tarun? Oh my goodness. All right. I think we got to wrap. Thanks for listening, everybody. We'll be back next week.